The softs markets weekly update on cotton, cocoa, coffee, sugar. Welcome to Critical Point Podcast. I'm Rich Pazin. August 13th, 8:06 a.m. Central Time. We're looking at the December cotton futures market, and I got all excited. Level 1 bottom. Market's supposed to head higher into level 2. And yes, we got a nice pop, and then it just stalls out on us, okay? I think it's just coming into a level 3 bottom that may not show up to next week, but ideally it bottoms this week. The level 3 are just twists and turns along the way within these level 2 and level 1 kind of swings or trends. So I think next week you'll see cotton pop up some. Now the problem is because it's lost some momentum, how well will it do into an L2 top? Due week of August 31st on into the week of September 28th. And I don't know, and I'm not going to discuss fundamentals this morning on softs. Way too busy on the stock market and some developments in grains and this and that. Just not seeing here. The cotton market behaves as though the fundamentals are just stalled out. They don't have the juice to move in either direction, okay? So for the moment, I'm still going to give it a chance that it's working higher over the next few weeks, but it may be a struggle. It may just be in a trading range into that level 2 top, and then it'll drop into a level 2 bottom. If by chance they hit it hard, it's possible for a late level 1 bottom and then they just put it up to level 2. That would still give us a trading range. In fact, it would increase the odds of a trading range. So at any rate, looking at the weekly stochastic, it's mid-range and trying to turn to a buy signal. And mid-range is where you have to watch out for secondary buy signals. A market does not have to be oversold to give you a buy signal, okay? So I want to watch out for that. Now, we've seen a nice uptick in open interest here. And since price is higher, I have to go with the idea we have net new demand. They're willing to buy this level. Not sure I understand this seasonally when looking out to harvest, but I know harvest can be late and really long, drawn out compared to many other crops in the U.S. So we may still see some harvest pressure at some point. Again, I think this whole up move was really just an idea that they put it down too hard, too fast, and they're hopeful the economies are recovering. Well, we did get some good news on initial jobless claims this morning. The weekly claims came in less than 1 million, the lowest since March. I think that's actually quite encouraging. Okay, I'm glad I flipped on the stock market and say, hey, we got to give this upswing a bit more to go. This could be a bit supportive for commodities, but I don't think it's a reason to rush out there and buy a lot of commodities. By the way, I think we're putting in a super cycle bottom in interest rates. I'll have a free update for anybody and everybody at that some point, if not this week, early next. But it's only the first opportunity. I can be wrong on that well through next year, okay? With next year is the latest year for super cycle bottom in rates. This could coincide with a supercycle bottom in inflation that probably occurred back in the Great Recession, but it may be occurring second time around now. This all can be kind of supported, meaning I think the first leg of a supercycle interest rate bull market can actually be supportive of commodities, not a negative, okay? But that's for another day. At any rate, I don't have much for you. Obviously, if it takes out today's high, or this week's high at 63.95 in December cotton, the level 3 trend is up, and likely it would provide a bit of evidence there that the level 2 trend is up as well. So I would be watching here when looking at the daily chart. I realize there's been some days that there was actually net new supply. I think on this weekly, the overall idea is we've actually had net new demand, and I'm looking for a bottom this week, even though it's not looking that good in terms of an actual pattern here. It looks like a negative bearish reversal. Let's go to cocoa now. And of course, I've been bullish cocoa for a little while here, and it is in the time frame for level 2 top, and notice it hesitated this week. I don't know what to tell you. I think it's going higher yet again, that we really haven't seen the top, but if it violates this week's low at 24.27 December, I am bearish, and it's time for level 2 decline. And here's the objective. Once it's peaked for level 2, we should see a few weeks to several weeks of net selling. It shouldn't bottom to sometime September, perhaps even into the first week of October, okay? Don't have any downside objectives for you right now. We can also see prior upside objectives and prior resistance could be potential support here in the next few weeks. We have the weekly stochastic still acting bullish, but it's starting to narrow spread a bit as if the market's hesitating, losing a little bit of momentum here. It is overbought. Don't have much going on in the open interest. You can see it declined so far this week suggesting that the bears are getting out. Their concern is still higher, but the bulls are also willing to let them out. They're thinking this might be a good chance of profit taking. For the moment, I think that's what it is, just a round of profit taking, and it's going to go a bit higher, which is why the bears try to get out. But there's no question about it. The market has had net liquidation. Money's moving out of the market. So, you can also make a case. They're recognizing the fact it's overbought. It might be kind of high priced here. Seasonally, yes, we could still see some support for some time, but I've always felt cocoa doesn't have to be doing well in October to December as we go into the year and holiday demand for chocolates, that they get it bought up sooner. So this may be our seasonal demand here, and it may be about over. Now, since this level 2 top is higher than the prior level 1, it is a warning. Level 2 may not be much of a decline, and it will be higher by October for level 1. We'll deal with that in a moment. So if you're trying to be a long-term bull or following larger trends than what I follow for this level 1, level 2, I think there's a chance you will be right, but I think you're going to have to ride out a level 2 decline here soon. I don't have upside objectives for you for cocoa. It's met some of my better objectives. I'm looking at that chart. I think you want to look at weekly highs and do your Fibonacci calculations of the last decline for potential objectives. I'm not finding anything on the fundamental side to give us any high confidence of actual valuation of cocoa. This is the December coffee chart. Beautiful negative reversal last week. Level 2 top. Trend is down at level 2 bottom. In theory, can show up this week. I doubt it. I want to see a little more, give it a little more time here, and it should bottom out by the first week of September. So it can be down the rest of this month. I think we're going to see a nice retracement. But like cocoa, this level 2 top is higher than a prior level 1. There may be some 10% probability, some weird patterns where this is actual level 1 and it can stay down for quite some time. But I think what's really going to occur is pull back into this level 2 bottom, another upswing into a level 1 top that ideally would put coffee back to near this level 2. In fact, ideally, it should go higher. So if you want to follow bigger trends, go for it. But I just got to warn you, you've got some risk of a setback here in level 2. And in years past, let's face it, most commodities, you want to be more bearish than bullish. I mean, it's just been an unbelievable long bear market in commodities, basically since 2012, if not since 2008 for some commodities, or 2011. At any rate, I'm bearish here for the level 2 trend. Don't have fresh news for you. I think they're right that we're getting improving demand due to improving global economies and U.S. economy. But are we there for any kind of strong demand? And isn't there really enough supply anyways? Nobody's going to run out of coffee. But bottom line is, I think there's a chance looking out into late September on into early October. Coffee can be higher, but then would be another sell signal for level 2, level 1. So at any rate, I think we got to pull back here. It's probably profit-taking. Open interest kind of eased back a little bit. Not doing much of anything, really. It's kind of like the same old group just trading coffee. You just hit a pocket here when the available demand picked up and the available supply said, you know what, I'm going to gamble here, see if you'll pay me more for that coffee, and they won. Now it's flipping the other way. The available demand saying, I've at least bought enough short-term here, backing off a bit, see if I can get a little bit of bargain, and there's enough. I'm not convinced available supply is picked up at all. It's just enough to bring it down. If you lose that available demand more than the supply, it only takes a small amount of supply to bring down billion-dollar markets. Okay, weekly stochastics overbought, rolling over for a sell signal here. No big deal. It's just really following the market. Okay. As far as retracement, downside objectives, watch for a 50% retracement right about in here. Your Fibonacci retracements. And let's face it, you really don't have much for support, however, to get to this old resistance around the 105 area. Better still down into around the upper 98 area for the December coffee. I don't think it's going that low. I think it's probably going to pull back to about a 110 area there. And then we should reevaluate whether we're going to get an upturn. Now, if it takes out this week's high at 119.45, consider at least a level 3 upswing, and then it just may swing back down for level 2. But you do have to become concerned. What if it's an early level 2 bottom and we didn't catch it? So if it takes out this week's high, I fully understand if you want to go get them on the bull side, that this might be a more aggressive market than I realize. But I would prefer a little bit lower next week at least, if not even into the following week, then get that moving higher. And here's the sugar market. It's holding up quite well. The forecast is working well. I don't know why I did it, but I bought the Kane fund, just a small amount for a long-term example for myself. Going to set on it for a few years. I'm not convinced we've really found a long-term bottom. Even if we have, it can retrace a considerable amount, be range-bound for a considerable long time. But I guess I got anxious. I feel like, well, I got to buy something. I don't personally have anything in commodities. So I got a long-term position in the Kane fund, and I think the ETF can actually do quite well relative to the futures. Whereas I look over in the grains, and Scott Irwin did some analysis there out of Illinois, basically showing that a lot of ETFs in the grains really don't hold up. You're better off being in the futures. So when it comes time for that crop event in the grain markets, I hope to get something on board there, something a little more aggressive, and probably just use the futures. I also would like to buy the cotton fund, but the one I'm looking at is in London. Don't know as I want to mess around with changing my accounts to actually get that, so maybe I won't bother with it. But I do think there's probably a long-term purchase in practically every commodity out there. But the question is that this year or next year for that long-term purchase. Okay, so we have sugar moving up, and this is the first week for level 2 top. However, the model prefers saying a level 3 bottom. That's the twist and turns inside these level 2, level 1 trends. It's basically saying, okay, that was the top. We got a little round of selling there, a little bit more of available, a backing off available demand, not really an increase available supply. And now they're back to buying. They didn't get enough bought, and they have to chase after it. So it's really saying the next level 3 top should not be the next week. So it's saying still higher prices next week. The level 2 is probably not occurring this week. Violation, however, of this week's low, and I fully understand why you might want to use last week's low. So anywhere from, say, 12.41 to 12.39 on the October sugar. Violation of those lows could be a sign of a level 2 top, okay? And it should work down into early September. The model has not shown us a time target, but it's looking like a bottom anytime in September for a level 1 bottom. And much like what we just said in cocoa and coffee, this level 2 top is higher than level 1. That's an immediate signal from the model, or for the model, that chances are it's going still higher in October, November for a level 1 top, or it should at least revisit the level 2 top. Okay, so it looks like there's some bullish structure here in sugar. Now, there is a 10% probability that this was a level 2 and this is a level 1. Now you can have a more sizable decline, and you don't necessarily have to recover and go to a new high. Okay, so there is a 10% probability of that. 90% probability this is a level 2, pulls back for level 1, and it should move still higher for level 1. So fully understand why some want to be bullish here into October to November, maybe even December. Still might want to be bullish to see if it can attack these highs up here in the upper 14-cent area. I'm with you, but you just have to acknowledge that they can still get a sizable setback into this level 1. The weekly stochastic is overbought, but it's wide enough spread to, at least the moment, consider there's a chance of lingering near-term bullish momentum. Okay, now we do see that open interest popped a little during this rally, but this week it's kind of settled off. So we're really not getting new demand here, but the overall trend over the past 3 weeks does suggest net new demand was present. It was like this surge was where they bought a lot, and now it's just a little bit of buying, but it's maybe the available supply has actually backed off. They're trying to be a little more greedy here, and they can make this work. We do have some upside objectives going in here in the 1310 area on up to 1370. And we've also drawn this range here for the top. So you can see this level 2 top, the market can actually rally into the first week of September. It can stay up all for the month of August. So I would probe the upside of sugar for a while here, give it a chance, but I would not like sugar if it moves below 12.41, although I realize some may want to use the prior low there. Okay, that's a wrap up for the softs this week. I like what I see for these markets to continue to probe the upside. Not so sure on cotton, but I think there is a chance for a little bit of bullish behavior yet this month for the softs markets, but we do know corrections are coming here over the next few weeks as well. Manage your risk, Ralph, and Alice, others. Thank you.